Hello, I am Miyun from the University of California. On April 26th, Miyun's special broadcast begins. Today, the term special broadcast might sound a bit unfamiliar. The reason is that we couldn't meet Mr. Kim In-jung, the man of the weekend in the morning news, for a long time. But today, after a long time, we are finally meeting Mr. Kim In-jung. Hello, Mr. Kim. Yes.
Hello, Mr. Kim. It's nice to see you. It's been about 4 weeks since we last met, and I've really been looking forward to this. I know many viewers have also been waiting and are excited, so today I hope we can have a great conversation together.
Previously, when we met every week, it didn't feel like much, but now that it's been a while, I realize how much I've missed it. It's been some time since we last met, but frankly, the United States stock market atmosphere has been poor. Today, we're conducting the interview under the theme of United States Stock Market Beginners School. But before we get into the main topic, I think it would be good to hear your insights on the current overall situation of the United States stock market. How do you see it? Yes.
Actually, rather than sharing my own insights, I think it would be better to explain the insights based on data. First of all, I will try to share my thoughts based on the actual current market situation that I am seeing in the service and things like this as I look at them together. Can you see the screen?
Yohiga market.
We talked a lot about going to the market with a score and judging the whole market, but I also heard a lot about sharing, buying together, and exploring together. And when greed goes all the way and the score is at its highest, usually when you see a lot of excitement, it's not the beginning of a rally, but when greed comes all the way, it can go all the way to the top. Many people say knowing the Woo Hyung-ju score leads to success. I've mentioned the Mark score in my videos and use it too. So from stocks to real estate, a lot of amateur investors are now watching Gongpo's show, and at that time I was only talking about these stages. At that time, investors were likely wondering what to do with many concerns and worries.
That's right, AA.
For conservative investors who prefer investments matching their time frame to keep their money safe, it would have been easier. Even if you chose differently, your money was likely still secure. If you listen to this max score and look here, you can see that the current situation is at the bear stage. Looking here, you can see that the bear sentiment is at the stage where it's spreading in the market. So, we selected the asset classes as a center and showed the strategy of buying them because we thought that would be more effective for beginners. It's not just about the level of the market being important, but our current situation is just dragging our hearts down. But when we ask ourselves what we should do, that's when we look at the level of the market. Here is an investor chart laid out like this, and if you look at it, you can see the current stages. So, if you look at it like this on the screen, you can see the market situation and investment strategy divided into each section. So, back then when Joe He was at the very bottom, just before the distribution section, or even just before that, it was still the distribution section. It continued for a while, but at that time the market was dominated by excessive greed and excitement. If you look at market investment strategies, it's basically about buying at the lowest point.
It's a period of accumulation, a low price zone.
It's a time when you should try to buy aggressively with a focus on value investing. That's what people who understand this say is good. Right now, stock prices are going up, but if you look at the investment flow, the market is just confirming a short-term rebound. And with a focus on blue chip stocks, now is the time to selectively buy and monitor the timing of your purchases. So if you sign up for the premium on the left side of the screen and set your interests, you'll be able to get notifications and information like this. When receiving a buy signal, exercise greater selectivity and caution with your purchases. This approach will lead to success. So if you look at this overall, it should be good. So the current situation is not just about the overall market conditions, but rather, it's better to selectively buy stocks that are showing upward momentum and focus on those sectors that are performing well. During market corrections, few stocks shine. It's best to be selective when buying stocks in such times.
That's good, Jisoo.
It's best to buy index ETFs. Previously, I checked the data, and if you invest regularly during the public subscription period, on average, you can expect a return of about 8 to 10% and sometimes even up to 12% if things go well. Those patterns are still showing up now, so if you catch the direction and momentum of investment with those trends, I think it will be good. So that's why I made this market score for a year.
When I show it to you at this time,
When I look at the chart, April 10th at that time, April 10th and 11th, that was the lowest point when it dropped the most, and that's when the buying signals were the best. The fear index is gradually rising from its lowest level, indicating increasing fear in the market. But until now, it's still better to buy selectively, focusing on the top-ranked stocks. Conversely, there are instances when the market score increases, such as on June 6th.
so this,
So if you look at June 6th, this is currently June 6th, and if you look at this score chart, it's at this time.
this,
If you look at the graph, now Max's score has gone over 83 points, and after passing 80 points, the period of rapid growth is actually November and December. So if you look at December, just before the actual correction, the market was already in a pretty overheated zone. At this time, you can see from this data that you need to reduce your stock holdings and increase your cash holdings. This is also data that you can only see at savings companies because it was developed and managed in-house by the savings institution. So, conversely, when the market is at the bottom and the exponential moving average score is low and it's a time to be afraid, you need to increase your stock holdings. If you look at it in the long term, you can clearly see that this will come back up to the bull market stage. But usually, our instinct is to want to buy stocks when the market is rising and to sell when it's falling.
but those things,
But by acting against your instincts and sticking to your investment principles, you can become a more rational and successful investor. We tend to follow our emotions because our minds are easily swayed. So when we make decisions based on this kind of data, it may seem easy, but when it comes time to actually invest, our emotions get in the way. Even though it's possible to make the right decision, it's much harder to do so in reality. If you reflect on those parts, you can get a comprehensive view of the current United States market and also analyze the future market conditions, which I think will be helpful. 저는
Honestly, I was very surprised. This time, in cases like mine, I usually use consumer news and business channels' public charting tools. But this is the first time I've used the actual market score from Choice Stack. This time it matched exactly 100% with the market's direction. To be specific, the market peaked on April 8th, and then it started to fall in the middle of April 9th. It stayed low until around 4,900, and then from April 10th and 11th for about 3 days, market score remained at the fear level for the first time in a while. So, until now, there could be another double bottom, but up to this point, market score has matched the market direction 100% accurately. I have a lot of trust in Choi Sang regarding this time. How can it be so accurate like this? If you ask why, it's because I listened to Representative Daepyo Nim's words before, and they make decisions based on data, so I rely on them a lot. So even on American broadcasts, they look at market capitalization, volatility index, and consumer news and business channel is public disclosure ratio. Instead of making decisions based on feelings, we should make them based on data, which I generally agree with. The important thing is how accurate this data is, and that's a very essential factor. It was the same, but this time it was a good opportunity for us to check again the accuracy of the data provided by Choice Star. So in the stock market, not just for 6 months or 1 year, but also for 5 years, 10 years. And 5 years, we plan to continue investing. Having reliable data tools when making long-term investments like this is extremely important. So I used to think that ChoiceStar was just a data tool I would try once or twice. But this time, through this process, I realized it's not just that. That's all.
That's amazing. That's right. If you could also talk about the current reign or the stock market reign through those parts earlier, that would be great. Next time we film, I'll make sure to bring it up again. That's good.
And this time we did a broadcast that we had been planning for a month. I'm sure those of you watching this broadcast have been looking forward to it as well. So during that month, how much has Choi Sung-sang changed? If there are any new features or upgraded parts, could you briefly introduce them?
Yes, since there are features that investors can use directly, let me briefly introduce them. The backtesting score feature has also been added, and another added part is the SMART score.
smart,
The score consists of several parts.
The score is an indicator that determines if a company is a winner. This table breaks down the categories, making it a SMART score. A lot of investors were worried, but now this score is 75 points. How much was it a year ago? This company's score dropped from 100 to 75, causing concern for investors who prefer to invest in top-performing companies, leading to questions about its performance. So, for this session, I thought we needed to develop a page where you can easily see that trend at a glance. That's why we added this feature this time, and now I'll show you how to use it.
On this screen.
If you look here, you can see it at a glance, but as you can see, it's still empty right now on this side. This is data from a year ago, and as you can see, it's been increasing this much. If you use the mouse or tap or click with the mouse, you can see the sections more clearly. It's better if you can make it stand out more, but it's still not very clear, so I added a tooltip like this on the side. The score is shown here, so you can compare your latest and previous records. If you scroll down, you can see the detailed breakdown. The chart displays the total score in a specific format, which I have explained previously on the broadcast and also discussed on another occasion.
Let me introduce, and here is Mr. Debio.
While studying for the test, you also practiced speaking this language and tried this as well. If you look at this, Jeomsu had 48 points a year ago, and this score is a very difficult score to achieve, but it's possible to get this easily like this.
No, that's not it. From 48 points.
From 59 points, then again, from 68 points, and then up to 75 points in just 1 year, companies that rise this much in stages are usually special cases.
To that extent.
Now, Duomogo has raised its overall score quite a lot. If you look at this table, you can see what these things mean now, and we've arranged the text so that you can see these things now. And if you look at it again, if you scroll down, we've also arranged it so you can see it by category. To explain why, the overall score is made up of 5 categories, and among those 5, you can see which ones are better. For example, if the growth score improves from 55 to 85 points by August 2024, and the growth index exceeds 80 points, you are entering the high-speed growth phase. If it reaches around 85 points, consider that you are entering the super high-speed growth phase. That's why Duomoko's growth is exceptionally good at this point, and at this stage, you need to catch the investment point. This is the kind of pattern you can see. If you're wondering whether the growth has been maintained, it's not slowing down. Instead, the high-speed growth is being sustained. That's the correct way to assess it. If growth slows, valuation drops, but as long as growth is maintained, it will remain unchanged. That's why growth is important. Uniqueness scores 40 points, while financial stability ranges from 60 to 100 points, maintaining at 100 points thereafter. Profitability also improves by stage, showing positive results. So, along with growth, profitability, which was at 10 points, has now turned around. So, you can see that this is a company that has grown significantly from 25 points to 40, then 45, and up to 60 points, and at the same time, its profit margin has also improved. The cash flow has improved from 80 points to 90 points, indicating an improvement in the cash flow statement. So I've arranged these 5 items so that you can see each item separately like this. So if you hover over this smart score for a year, you can check the numbers here. So when you analyze which industries are attracting more investment and which ones have improved the most over the past year, or which ones are falling behind, you can make more accurate industry analyses by judging these things. That's good.
I think the number of subscribers you requested has increased significantly, and you have achieved that in a short period of time. So congratulations to you as well, Representative. I think this will be very useful. Is there an upgraded version of this available?
Yes, there is. When I first appeared on the show, I said that my service was still being upgraded and not yet complete. But I think there's still a long way to go and a lot more to be done. So if you could work with me and maintain this partnership for about a year, I think we could provide a much better service to many people. To keep that promise, like I'm working every day with our company team and partners to improve and upgrade our service. Also, as for the updated parts, I used to have an exponential moving average chart and a moving average line chart on my screen. But if you look at the moving average line chart now, it looks similar, but the chart shows the 5-day, 20-day, 21-day, and 61-day lines individually.
That's how it was. In the basics.
Jiao Hui drew 3 lines, 21 lines, 61 lines, and 121 lines.
So actually,
The intersection of the 21 and 61 lines is the midterm signal, while the intersection of the 61 and 121 lines is the long-term signal. Our short-term parts aren't very meaningful, so we use 5 and 120 days, but even the 120-day outlook isn't that good. But if there are 4 mobile lines, it gets too complicated, so it's actually hard to see the chart well. So, I use the 5-day and 20-day lines to track short-term momentum changes, and for the 20-day and 60-day lines, I use them to check the midterm momentum. I think that's a good way to use them. Especially when the market or the moving average convergence divergence score itself is high, like around 80 points, and it's getting adjusted, it's better to look at the short-term signals rather than the midterm ones. But when the market is coming up directly, the midterm signals are more helpful than the short-term ones. Staring at it for a while reveals things you can see. If you use the market score and the indicators together and use the exponential moving average chart, you can decide whether to make a judgment based on the short-term or the midterm signals. I think that alone will help you a lot. Even in cases like this company, if you look at it, the 5-day line crossed above the 20-day line, and then the 20-day line hasn't crossed above the 60-day line yet. But since the stock price is around $370, there's a high possibility that the 20-day line will cross above the 60-day line soon. In technical analysis, the 5-day and 20-day moving averages give you the advantage of seeing things a bit quicker. Conversely, when trend trading, there are rules like when to buy, sell, or buy again. However, these decisions should be made based on the overall market conditions. So, if you use the 5-day moving average to make decisions a little faster in various parts, I think it will help you even more.
This part is also critical initially. To be honest, I also used the moving average investment method a lot in the past, but recently I've been a bit cautious because I've seen some signals that make me hesitate. Shortening the moving average period helps focus on short-term trends. Following trends blindly, especially in today's market, may lead to impulsive decisions. To avoid this, I'm carefully watching short-term trends, which can be a very useful tool. Previously, you mentioned that you were developing an iPhone application. By any chance, is it finished now?
Yes, it's finished. So, is the screen showing up now? Yes, it's showing well. I'm drawing one through generative pre-training. So, Joe, he started with a choice star lecture, then renewed the Android version, and recently released the iPhone version. So, if you search for Choice Star in the App Store, you can now download it. When you install it, just install it once, and when you run it for the first time, would you like to use the guide? Don't worry about the alarm for now, just select Yes and proceed. That's how it should be, but the app works normally. Even if you select No during installation, the app may not work, so right now, the update notification you just saw is just a test. Once the test is over, you can select whatever you want and the app will work fine. If you watch this video and agreed to receive notifications, especially for version updates, please allow them. Rest assured, no marketing messages will be sent, even if you allow notifications. Non-premium members won't receive notification prompts. Premium members should allow notifications for the best experience. Also, if you haven't received notifications or messages because you stayed abroad for a while, there are a lot of good contents and messages that you might have missed. All those useful contents and messages are still there, so you can check them out anytime. So, all those notifications are now delivered through push messages, so even if you're abroad, you can receive them right away. I recommend you download Android and iPhone apps and install them so you can use them conveniently. In the meantime, there have been a lot of breaking news and various events that matched your interests, and when those happened, you could have received a lot of information for free as a member. Free members still receive notifications, so no need to worry. If you just set it up once, you'll mainly receive information and content notifications that are tailored for you, so you don't have to worry too much about marketing messages or spam. So if you download it today and try using it over the weekend, I think you'll like it. Yes, that's good.
Those of you on the United States side probably use your iPhones a lot, so I think you'll really appreciate this news. So far, I've been reviewing various feature upgrades for Choi Soo-sang. If you prepare today and move on to your new class, I think it will be good. Jiao Hui has been giving lectures on how to reduce investment risk for the past month. Up until now, I think this part has been very important from my perspective. The reason I say this is because last week, when the United States stock market rose the most, the S&P 500 index went up about 18% in total. But right now, if you look at us, we're still standing at the edge of a cliff. If the economy seems to be recovering faster than anticipated due to Trump administration policies, I believe it could potentially drop over 18% again. If, due to the Trump administration's tariff policy, the economy slows down and the market is shaken, wouldn't that mean the recent 18% drop wasn't the end? We are holding both Gazprom and Scenario, and we need to keep both. In the investment market, we need to be prepared for the possibility that things could get worse. And even when there is potential for an upgrade, we shouldn't let our guard down. So when I look at it, the important thing is that recently, instead of stocks and the stock market continuing to go sideways, risk is being built up with safer assets like treasury bonds and money market funds. This is something that's even being talked about on broadcasts. So today on the broadcast, I'd like to request a lecture about how, compared to a month ago, we can focus our investment funds on safer stocks with less risk, and whether it's possible for us to do that. That's the content I'd like to ask you to prepare.
Now, I'll continue by talking about the ways I personally use to reduce investment risk, as I mentioned earlier. Let's first examine diversification, which is often mentioned. To sum it up in one sentence, the first is to check the risk and feasibility of the actual investment. So check things like financial ratios, liquidity ratios, interest coverage, and debt ratio. For beginners, I recommend checking the financial stability score of the SMART score and only investing if it's at least average. For the practical aspects, refer to the consensus data on our site to see how recommendations are trending. Check those sections and mention the risk. I first discussed this, then talked about the company's current cash flow and profitability. Even if a business is growing, poor cash flow can cause issues, which I also covered. Check the operating, investment, and financial cash flows. Remembering and examining these three things will serve you well. So, for business, plus for operating, minus for investment, and minus for finance. So, if you remember plus for operating, minus for investment, and minus for finance, usually there are no problems for financial companies. If you judge it like this, you can avoid risks. This is the time required to organize accounts receivable for the second period. Now, the next part is about risk related to the balance sheet. So, when the stock price is too expensive, that's a risk in itself, but we often fail to recognize it as a risk.
But then it's too...
When the stock price was cheap, that's when we should have been more aware of the risks, but we tend to overlook those things. So today I would like to talk about how you can manage risks related to this volatility. That's good. First, if you look at the screen I prepared, valuation refers to the act of determining the value, that is, the activity of appraising the value of something.
It's called valuation.
How much is this worth? That kind of activity is what we call valuation. Let's say I put up a notebook for sale. I need to put a price on this notebook, and several people will look at it.
Then several people.
How much would you pay for this notebook?
Heungshi.
Depionim, do you have any idea how much you would pay? First, let me ask, how much is the price? Also, is the price negotiable? It's a recent model and a new product.
That's right. It's a new product.
Photo.
I followed memorying hard and saved up little by little.
Yes, it will be a little different. In the latest version of MacBook Air, it's the latest model with the latest specs.
So
Information?
I'll tell you. Then,
So, those of you who are watching passively may not realize how valuable this is.
that's right.
Then, shouldn't it be at least 2 million won before taxes? If it's a lot, maybe around 2.5 million. For above, the cost is slightly higher. For Air, expected to be around 2 million won before taxes, so consider that as well. Mr. Depio, you raised an important question out of curiosity, but truthfully, we have no information about the valuation. If this photo isn't a used one, It looks just like a MacBook Air, but in reality, a lot of MacBook Airs are taken apart and have their parts replaced, and sometimes the inside is filled with different components, so you have to be careful.
That's right.
So that's why they call it a bait and switch, to lure people in with the price. So that's how we do valuation. But let me ask you a second question. When our investors do valuation, what's the hardest or most challenging part? On the left side, there's Americano, and on the right, when you go to Tim Hortons in Canada, they call it Canadano. If you sell this coffee for 50,000 won a cup,
And also,
on the other hand, the right side is the most expensive luxury item.
it's a car reservation. That's
The price ranges from 1 million won for the cheapest car to 5 million won. A 50,000 won coupon is available. So, which one do you think will sell better? Viewers, please think about it for a moment as well. It's a very simple question. A car's price doesn't determine the price of other items. Selling a car for 5 million won doesn't mean a coffee will cost only 50,000 won. But when we invest in stocks, we shouldn't think like that. That's the point. A 5 million won stock feels too pricey, but you'd buy it at 500,000 won. A $100 stock seems expensive, but you ponder if it could dip below $10.
it's like this.
I'm like a coffee, but this is what splitting means.
That's what it is. At the cafeteria.
Especially when it comes to stocks. The concept of splitting and bonus issues is completely different from just being cheap. I know it sounds similar, but the price and value are different. But in the stock market, when we buy things, we always make comparisons and judgments. However, when we buy stocks, we don't make those comparisons. It's too much. $300 for the price alone.
But it's expensive.
Isn't there anything for $300? If you ask like this, it's not about the value, it's just about whether the price is 50,000 won or 500,000 won, whether it's high or low. That's all I'm explaining. There's no value involved. So, saying that the stock itself doesn't mean valuation is a good way to remember it. Then what exactly is valuation? Right now, whether it's cheap or expensive, the final judgment is based on the exchange value. Whether you pay 50,000 won for coffee or 5 million won for a car, when you set your price, you receive something in return. You have to consider the parts you get in exchange for what you give up. That's what valuation is all about. This is how to judge if something is cheap or expensive, but we don't make this judgment when buying stocks.
For example, Oroji.
The only judgment we make is whether the stock will go up or not if we buy it now. For instance, I bought a coffee for 50,000 won and sold it for the same price, but the person after me bought it for 55,000 won. This is the type of question being asked.
That's it. It's just speculation.
If someone bought it for 55,000 won, the price increased, which is common in the stock market.
People buy first and then see what happens.
Blindly buying during a rally often means the market is at its peak, and rushing in can lead to getting burned. Conversely, when everyone is panic selling, the market is usually performing poorly.
At that time, that's when
It's when undervalued stocks are around. So, in the end, when we buy undervalued stocks, we have to compare what this stock gives me. But you can also pay attention to dividends. If you do it this way, it will be good. Now, fundamentally, today we're not talking about the method of actual valuation. I may not know exactly what is right or wrong in the process of elementary, middle, and high school education, but I will cover the basic and essential parts of valuation at least once in the following sections.
So just about valuation.
But since there are so many difficult concepts and terms, I don't think I can cover everything in Mijucho. And I'll just cover the basic parts. And today, if you could focus a bit more on the risks of valuation, I think that would be good.
So we
Valuation consists of two main components, the intrinsic value and the changing value. Valuation is a difficult word, and it can be confusing to think about it like this, but don't worry, I'll explain it in an easy way for you.
so intrinsic.
So when we talk about value, or the intrinsic value of a business, or even the internal value, what we mean is the ability of a business to consistently generate cash flow.
Donyo, susuro.
This is what we call the fundamental value or intrinsic value that a company creates on its own. When discussing variable values, if divided into two categories, they are called the attached value and just the attached value. This classification is unique and not found in other books. When we talk about this variable value, it refers to the value that changes more or less than the intrinsic value of the company due to market conditions, boom and bust cycles, or rising and falling trends. I call this the variable value. So the sum of the intrinsic value and the variable value is what we call the total value of this company. For example, let's say a company's stock price is $100. Imagine the stock price is $100. Within that $100, there is the intrinsic value and the variable value. Let's say this company's intrinsic value is $50, and due to the stock market situation, the variable value added another $50. That means the market is paying more for the variable value. Some companies trade at $100, while others with an intrinsic value of $150 don't attract much interest due to their industries. So the change in value is minus 50, so it adds up to $100. Then, if you just look at the fundamentals, which industry is better between A, which is undervalued, and B, which is also undervalued, based only on fundamentals, A would be better, because the change in value is bigger. But in the long run, when you invest in non-cyclical industries, you can achieve returns not just by reducing risk or lowering volatility, but by successfully investing in industries that grow over the long term.
A good way to choose.
That's what it means. So, just because we shout and make noise in the market, saying we want change, it doesn't mean we can get everything right. We can't always get this timing right either. Ultimately, whether considering a company's intrinsic or book value, it's crucial to focus on what matters. If variables or market conditions are unfavorable, even if the company is undervalued, patience may be required before investing.
Then it's sufficient.
That means the risk has been hedged. When people say that the stock's downside volatility is strong, it means that the price doesn't fall much, even when the market changes. But there are also cases where people judge that the stock is currently cheap and decide to buy it, thinking that its downside volatility is very low. So the way to calculate this intrinsic value will be explained in detail in the next lecture on valuation. When evaluating a company's value, we compare its market capitalization, price, and net profit, earnings. This comparison is called the price to earnings ratio, which is the ratio of price, P, to earnings, E. So you can compare the part called value with net profit. You can compare it with assets. You can compare it with sales. You can compare it with operating cash flow. You can compare it with dividends. And you can also compare it with growth rate. But what I mean by all these values is that they are things that are actually created by the company, like financial statements, income statements, and cash flow statements. I'm only talking about the numbers that are shown there.
That's it.
Those things correspond to the company's fundamental intrinsic value. This price change is happening, but when we look at this ranking, first we look at it from the center, and the second change, which is called reversion, is what we call reversion to the mean. Currently, the United States stock market is focusing more on this movement, looking more at the price. So that's the difference. We keep looking at the price a lot, but honestly, it's always been like that. If you say you look at the price a lot, it means the stock market isn't doing well. So we should completely switch to good companies. At times like this, that's what people are watching. The allocation varies based on the circumstances. That's why, even if you hold the intrinsic value of a company with little volatility, you end up watching the stock market trends a lot. When you look at it conservatively, you usually don't give a price to earnings ratio higher than 15, but when the market is really hot and you focus on that, sometimes the price to earnings ratio goes up to 25, but the ability to endure this fluctuation is also important. So if you look at this difference, in the end it's called a change in valuation. We can't accurately time the parts of the valuation change, so it's important to focus on the fundamentals and invest in the long term. This part is the first point that should be brought up when many people study valuation. That explains why I made this drawing.
Please remember this.
If you pay attention, I think it will be good. Now, let's move on to the actual demonstration. First of all, many of you are already using the animation feature in PowerPoint, and most of you probably use it a lot. The reason why the valuation table is called a price table is because the industry took the example from the price table. In the past, it was called price table, but now it's called valuation. The analysts from the securities firm set the target price at $164 and the highest target price was set at $220.
And next,
Right after that, someone suggested $102, so these are the prices from these people, meaning the prices from all 62 people and the average value of what they suggested. We call that a consensus, and we want to reach that consensus and set a price, which we call a target price. That's why a lot of people are using this method these days. But we use averages, and among them, the median is the most accurate, and the mean is also accurate, but in reality, there are clear risks with these averages. Among them now, we don't use the target price that analysts suggest, but rather we use the algorithm that the analysts themselves developed.
There is right away.
Looking at this chart, you can see, if you look at this chart now, you can see that the stock price has been rising a lot recently, but this blue and pink color here shows the price range of the recent short selling transactions. So if you look here, the stock price has been going down, so it's being lowered little by little.
That's what's happening.
So Nvidia's current earnings per share growth rate and things like that were not as good as before. It wasn't as good as before. To put it simply, the price is high. And because the price is high, the current stock price is also high. But if the situation changes, this premium could disappear quickly. It's like the adjusted stock price is pulling the stock price down, but if the stock price goes up, it pulls up the adjusted stock price. And if it keeps going, when the stock price goes down, it goes down again, and right now, it's going up from here. First of all, but this time, unlike what I expected, the stock price fell like this. So how will NVIDIA handle this situation going forward? This is key.
This gap in the end.
If someone must take the loss, you have to pay for it out of your own pocket. If you look at the original, it was before the interest rate hike, so house prices were higher back then, around 170 million, 175 million won. Now, even 100 million won is hard to get, so you have to go straight to the listing. If the target price keeps dropping, it won't work, and since there are so many variables, it's hard to keep this situation going. You need to send a routine update report to the brokerage company.
That's what happens, but
In many instances, these update reports are merely perfunctory, with people simply going through the motions. So, to explain this logic, if NVIDIA doesn't go up much from around $100, then among the 62 analysts, quite a few will continue to release articles lowering NVIDIA's target price, and those articles will keep coming out. NVIDIA's target price will be lowered, and that's what will happen. Lowered from $175 to $160, but the current stock price is...
it's at $100, so
It's a downgrade that doesn't really mean much, but if you write it as an article, it sounds more negative. The target was lowered, so the stock price fell, and if the target is lowered again, it falls again. So relatively, there are some parts in the portfolios held by many people that are not really necessary. And if you look at the part on the right, you can see the changes in the consensus over the past 18 months. As you can see here, Bio and Outperform are falling, while Outperform is showing better results than the overall market. The number of people who have a good opinion is the consensus, and that's about this level. In the past year and a half, there hasn't been a single downgrade. This isn't just for Nvidia, but for any sector, it's very rare. So, among analysts, there are definitely some who clearly say that you should be cautious about investing just based on this, and that you should be aware of valuation risks. So when it comes to target prices, it's good to refer to them as a supplementary reference, and it would be better to look at the valuation services provided by various companies as well. So let me explain once how the target price that comes out from the securities company and our chart can look different. Right now, this screen shows Tesla's current stock price. This is a long-term chart, and I'm showing you the data from the past year. During this 1-year period, the section where the price moved together is marked in green. Here, the yellow color, here, the yellow color,
here, the light blue color.
here, the red color. This is the graph of the same section. If you look, the target price of the analyst was actually in this range, so the stock price was lower. At that time, the current price was lower than the target price. So in reality, every time the opinion had to be buy.
That's right, but
The stock price rose even higher from here. First, there was a positive article about Tesla, so it went up. And second, when it was included in the Trump administration, it went up again. So this was an unexpected situation.
that's what happened. So
So you can't keep holding this stock with that goal in mind, but at the same time, the price was rising so fast that it was hard to let go. Then, on the contrary, you might sell and then buy back in, or you might sell and then regret it, so you buy again and then sell again, and keep repeating this cycle. So, I'm watching this as a post-action, and when we look at the post-action indicators and invest, we see the current price and use it as a reference, but we don't rely on it completely. That's because the meaning of the line and the value of the industry can change depending on the internal value of the company, so the stock price can deviate. That's why, in reality, it doesn't always match up, and that's something investors need to keep in mind. So, I think I need to create my own valuation, even if it's difficult. Even in the case of a momentum stock, I try to make my own valuation.
Coming out of Morningstar,
Target price is not written by analysts who directly use the target price or do it through quant, but by valuation experts.
but most of them,
Sites use valuation figures from securities firms as target prices, resulting in similar trends across charts. There are also many parts that need to be improved. We are still updating the current algorithms and engines to maximize the accuracy of stock prices, but I'm not saying that we are perfect. We are not perfect, but we are constantly striving to improve, and it's clear that this level needs to be raised in the industry. If you look to the right, you can see the Tesla stock price line in yellow. When you see these lines, you might think that the stock is undervalued, and at this point you might have thought the same as me. But if you look at this point, this section is considered overvalued, and that's the area people refer to as being highly valued. At that time, it was just way too expensive. For about a year, there wasn't a single moment when it was undervalued. When the price drops down to this dotted line, you can simply see it as being cheap. And from there, I personally like to look at it more simply with the exponential moving average chart. When the 5-day and 21-day lines touch or reach the high point, it's a good time to sell a little. Making decisions this way is the right approach. Where are we now? If you look at it now, the Tesla stock price is coming back into the influence of the low point again,
that's the situation. If you ask why,
because the value of the industry depends on the stock price. And if you look at the chart, it's not far off yet. On the right side, you can see that this is a chart where the typical industry price trends are shown as a straight line with each price point marked individually. The chart displays the industry's real-time status, allowing you to quickly see how the current situation is evolving. So, rather than focusing on how the market as a whole is changing, it's better to concentrate on your own portfolio and monitor your own positions. That way, you can see the information provided by various sites more clearly and make better decisions. We are bringing you 2 companies with potential, and we have only included the ones that have been recently updated on our site, so today we will keep it to a minimum.
I will do that. Nvidia,
They have a lot of interest and are watching closely, but on the other hand, why aren't there many new buyers right now? There are people who think like this. So I'm just watching for now. That's why in this uncertain situation, I'm still waiting and watching. But if you look here, it's clear that it's stuck between these 2 points, and that's the real uncertainty.
that's what it is. That's why
It doesn't come up well, clearly. So there are statistics here, and there are several mathematical techniques in this context. So that's why it comes up as a special case. So, when you sign a contract, if you say you want to sell at this time, the right to receive the payment doesn't come right away. And that's why it was originally like that. So, in about 8 to 10 months, you don't get the payment. But now, if you look at it, the value of this company is actually much higher than what they say. So that's why it's like this. Nvidia will keep rising like this going forward. That's because you should check the earnings per share stock price to earnings per share ratio or the earnings per share chart to confirm.
that's right. But
Right now, only the stock price has gone up, and the current valuation and the actual valuation have become very different. It went up once and then fell back down, and now it's repeating that cycle for the second time.
this.
This situation has just touched the low price line. If that's the case, then Nvidia is cheap. So yes, you can say it's cheap. But why is the stock price falling? If the stock price is falling, is it really cheap? That's what people say. So why is it falling? If it's falling, is it really at a good price? If that's the case, it's a good company and it's cheap. That's already been confirmed. But after that, if you ask, we're just waiting for the price to go up. At times like this, check the 5-day and 20-day moving averages. So if the price goes down, Nvidia is a good company, so there could be a correction, but it could also rebound easily, so you can watch it like this. Next, the second company is Celestica. The eponym also appears a lot in the video.
as a company, I personally,
While doing Naver Media and Celestica, When I look at Celestica and when I look at this volume edition, there were times when it was undervalued. Here, it's a bit of a high valuation, and also it's only been about a month since the most recent one. If you look at the end of January and into February, you can see that all these lines are breaking through and there's a strong upward trend emerging. When this kind of explosive rise happens, it's usually a sign that the stock is already in a high valuation state when you look at the data. At this time, if the company's value doesn't rise as fast as expected, the price can drop like this. Even if the stock price keeps going up and the value follows behind, this kind of phenomenon can still occur. But rather than just investing in any company expecting this to happen, it's much harder to find companies that actually have the potential for this to happen. And if you try to find them to that extent, even companies like Nvidia, which are expected to have annual sales growth of about 40-50% for around 4 or 5 years, are rare.
Are at the top. If you ask why,
Because if you keep growing like this for 4 to 5 years, then after just 1 or 2 more years, the valuation will already be doubled. At that time, even though it is possible, seeing a company grow this much is actually a bit of a hasty judgment. Next, after receiving the stock price adjustment, when the chartist looks at this market, they see that the price has fallen to a reasonable level or even lower. And at that point, they wait a little longer. In reality, they wait a bit more, receive another adjustment, and if the price falls below the fair value, then they recommend buying. That's how it used to be. When the market is unstable like this, people say that good companies will stand out. But whether a company is good or not, or whether it's a major player or not, you can only really tell when the market recovers and you see how strong it bounces back. Regarding valuation risk, when something is overvalued, the risk is low even if not purchased. However, when delayed, the likelihood of its value increasing rises substantially.
so sometimes
It's better to be cautious and make judgments carefully. On the other hand, sometimes things get delayed like this, but when you're in a safe situation, it may look risky, but in reality, it's not dangerous. When you're above this, the idea that it's risky can be conveyed through explanations. So I think it would be good for many people to see that. Lastly, if you hear a term you don't understand on this site, just search for valuation and see where it is.
if you search for categories,
Next, let's take a look at TSMC. TSMC is a really great company, and I think it's an industry that needs to be included in your portfolio. If you look here, this company, if you look at the smart score, it's ranked number 1. NVIDIA used to be number 1, but now TSMC is number 1. And if you look at its score, it keeps going up from 92 to 93 to 94. So it seems like it's catching up to NVIDIA. Growth score is from 80 to 85, profitability score is 90, financial soundness is 100, stability is 95, and cash flow is excellent.
100 points as well.
Because it's a business, there's nothing more to see.
That's it. That
Next, if you look at the second version of the animation, this version of the animation is here.
If you look inside that,
Like this, the evaluation.
before this,
If you wait, it will become expensive like this. And back then, I didn't reach that point, but there was a price that was in the high range. Now, if you look, this is a situation where the low price and the proper price are coming into the low price range. So these parts have good fundamentals, they're undervalued, and they're good industries.
so in the end,
How does the correction happen? If you look at the exponential moving average chart, you can see that it's currently rebounding from here. So if you look at it, is it a straight rebound? It dropped straight down like this once, then rebounded, and then dropped straight down again. So the previous low hasn't been broken, and it's still going up, but it's still not above the 21 line. So if it stays here for a while, there's still resistance. And if it falls again, people might get disappointed and react like this. But in the long run, personally, I think these charts will eventually go up from here, even if they fall back a bit, and they'll have to go up. Doing it this way, being able to survive in any market like this, is probably the best opportunity for us to make money in the stock market.
that's right.
In times of market volatility, it's wise to buy when others are fearful rather than optimistic. The market is focused on current performance, but there are stocks to buy when things improve. Johi is actively appearing on Maitam Television YouTube and Miyun Television. We review the stocks we recommended before and check their current performance. We focus on these stocks and analyze the timing of changes in supply and demand. For our premium members, If you download the app and register the stocks you're interested in, you can get notifications directly through the purchase notification or sale notification, or you can receive them as alerts or push notifications. Even if you don't check every day, if you look at it from time to time and filter the risk lists, I think it would be good for your investments.
Yes, today as well, I listened to Professor Myung Kang's lecture, which is always practical and insightful. Is there anything you would like to suggest or say to the viewers who are watching this broadcast and to your subscribers? I often emphasize the importance of diversified investment. If you diversify your investments, even if something goes wrong, as the representative mentioned, you can make more stable investments. Diversifying investments across sectors reduces emotional swings from focusing on a single industry. Spreading investments out helps avoid overly emotional decisions and enables more rational judgments, which is a key reason why diversification is so important. So after watching this broadcast, if you have about 20 stocks in your portfolio, try checking the correlation between those 20 stocks at least once. Despite recent stock market declines, if your portfolio contains overvalued stocks, consider reallocating some investments to undervalued ones. This is a personal thought I wanted to share during today's lecture. I will also go back and check the stocks in my own portfolio again, so I can review them without any bias. Thank you for your sincere lecture today as well. Looks like I'll have to wait for the next lecture. When each lecture ends like this, I often find myself thinking that I learn a lot. I wonder if everyone watching this broadcast with me is having the same thoughts, or maybe not.
Thank you so much for your kind words. Thank you. Thank you for preparing so well, and I look forward to seeing you again next week with more great content.
Thank you for staying with us late today. See you next broadcast. Have a happy weekend.
Yes, thank you.
Yes, thank you.